Welcome back. As promised, we have two companies joining us now, and very interesting ones because a lot of them have created wealth for shareholders. Uno Minda is one of them. Very strong numbers coming through from the management this time. The revenue has seen a 34% growth. The margins have also expanded by 80 basis points as some commodity costs have cooled. In another positive, Uno Minda has also bagged a new 300 crore order for EV products, for electric vehicle products. Sunil Bora, the Group CFO of Uno Minda, joins us on the show to take some questions. Sunil, thanks a lot for joining in. I want to first start with, what the 9-month performance has been, which is very strong this quarter around. It's a 40% revenue growth that you've seen in the last 9 months of the year. Tell us, how will you end the year and what is the prognosis for FY24 in terms of growth?
Right, Sonia. So as you rightly mentioned that for the 9-month period, we have grown our top line by 42% and also have done better in terms of EBITDA, which was, I would say, as guided by the company at the beginning of the year. I remember speaking to you when we said our annual guidance is around 11 to 12%, while we are at the lower range of it. But I'm happy that we are still, despite some headwinds from a segment in which we operate, we are able to deliver that kind of margin within the guidance. And in terms of our EBITDA also, if you see, absolute number also is higher by almost 51%, and the attributable profit is almost more than 1.4 times at 430 crores compared to 220 crores. So overall, we are very, very satisfied with the 9-month performance, and we do expect the Q4 to be in line with what we have been able to deliver in Q3 or maybe marginally better. So overall, we are very, very optimistic for the full year basis, and the growth momentum which we have built over last few years, we expect that to continue. In terms of FY24, as you know that we normally don't give a revenue guidance because the 90% of our revenues actually is directly line fitment. So we don't comment on the industry volume. So whatever industry grows, we have been speaking consistently that our goal is we should deliver at least 1.5x or more of the industry growth. And I am pretty confident that we should be able to deliver even more than that in the short term and in the medium to long term. Our plans are that we should be able to continue this 1.5x growth versus industry growth.
All right. Sunil, hi. Good morning. Prashant here. I'm reading that you said that EV-specific components annual order size is gone up to about 820 crores. Could you explain this? I mean, in simple terms, what does this mean? Just put this in perspective.
Yeah, absolutely. So these are EV-specific components. So just to take a step back, if you see our product profile, like switches, lamps, wheels, blow molding products, acoustics, etc., telematics, all these products which we have, they are agnostic to ICE or EV. So the transition from ICE engine to EV is not impacting us at all. So we have been working for last many years in terms of building that profile for EV-specific components, right? And we have built a unmatchable product profile in the two-wheeler and three-wheeler EV category. And this 800 odd crores number which you are speaking, that is specifically for the EV components, not about the existing, which also goes into EV. And this volume of or the revenue which we are talking about, that is expected to peak in 25-26, and that's what we have been guided by our customers. Yes, there is one factor, which is in case market penetrations is faster, it can happen even before that. So definitely it builds a lot of assumption in terms of the industry penetration and the guidance which you get from our customers. And this revenue number is specifically for EV components for, as I said, 25-26.
Okay, you had earlier guided for 11 to 12% margins for the full year FY23 when we spoke to you last. But now that metal prices have cooled off, raw materials in general are moving lower, you think you could do better than that guidance, more than 12% perhaps by the end of the year and in the start of FY24?
So Sonia, I think we need to again take a step back. So when the commodity prices were going up, our endeavor has consistently been that we should be able to pass through to our customer all the commodity price volatility. And we have been very successful in that. Almost 90-95% of our commodities are now passed to our customers. So I'm sure you'll appreciate that when the prices come down also, it has to be passed on back to the customers. So we don't intend to benefit for that. Yes, you can see some impact on quarter-to-quarter basis because when you get compensated by your customer, it is maybe a lag of a quarter, etc. So when you go into Q4, you actually will get pricing of Q3 and something like it, right? So you don't expect to gain a lot out of this commodity softening the same way when the prices were going up. So it works both ways.
Hi, Sunil. Good morning. Sunil, I want to focus on the airbags division. that's going to be the big push and that's going to be the big growth driver as well. So give us a couple of numbers out there. As of now, going by the investments that y'all have done, how geared up are y'all for this opportunity? At peak revenues, what can you generate from airbags? And as a percentage of industry size, where do you see, your market share headed?
Yeah. So Nigel, as you would have observed that the board has also approved an investment of 175 crores yesterday for increasing the capacity for airbags. So this investment will build incremental capacity of roughly 350 crores of revenue per year. And in addition to existing, we should be able to do somewhere around 700 to 800 crore kind of revenue for airbags. And from industry perspective, this will be roughly around 20 to 25% kind of revenue potential in the segment.
So including this 350 crores, which will come on stream, two times your investment, your total potential is around 750 to 800 crores from airbags. Don't you think there's a bigger opportunity out there? 175 crores, I mean, it's a decent number, but since that's going to be a big growth driver, growth potential out there, would you want to put some more money over there?
So, Nigel, if you would have seen the past many years, right? First, you have a driver airbag becoming mandatory. Then you have the passenger airbag became mandatory. Then there is this regulation which has been talked for the last 2 years. A lot of vehicles have already launched airbags, vehicle with airbags of almost like 4 airbags in a lower segment. The higher C and D segment were anyway getting 4 to 6 to 8 airbags. It was only in the A and B segment where this penetration was low. And there also in last couple of years, you would have seen a lot of model launches have already built in this. So the incremental opportunity is only in the A segment. And that is what we are now targeting over by the incremental capex.
Okay. 25% of your revenues comes from the lighting business. And in your presentation, you mentioned that your 4-wheeler lighting plant at Gujarat is now ramping up. Once this ramp up is complete, how much could your quarterly revenue run rate rise to? Currently, in any case, your lighting business revenue run rate is at about 650 crores per quarter. Last year, it was about 450, 500 odd crores. How much can you take this up to once the ramp up is complete in Gujarat?
Yeah. So it's not only Gujarat, Sonia. If you remember last board meeting, the board has also approved setting up of a new plant with an investment of roughly 400 crores, for which the location is yet to be finalized. So this is the segment where we are very, very bullish, specifically in the 4-wheeler lighting segment. And this space, if you split 4-wheeler and 2-wheeler, we are already like a fourth or a quarter of market share in 2-wheeler lighting segment. But in 4-wheeler, we were low, maybe around 13 to 15%. And that's where we see a big potential for growth. In terms of numbers, as you mentioned, 650 crore, definitely it can be significantly higher. Our internal target is in next 5 years, we should grow somewhere between 900 to 1,000 crore at least on a quarterly run rate basis. And I'm pretty confident that as time goes on, we'll build in more opportunities to grow this even further.
All right, Sunil, we'll leave it there. Thank you very much. It's always a good conversation and always optimistic about growth prospects in various segments. Thanks indeed. Uno Minda is about 2.5% higher at this point in time. But let's move on. Intellect Design Arena is the next company on our radar. We are speaking with the management. The third quarter revenue growth has slowed though, and it slowed sharply to 7.6%. It was, the previous quarter almost 16.7%. A license segment has slipped some 18% as compared to last year. On deals, while the pipeline is continuously growing, the number of new deals this quarter has also come off. Arun Jain is Chairman and Managing Director of the company, and he's joining us right now to take some questions. Mr. Jain, it's always a pleasure. Great to have you with us here on CNBC-TV18. Could you tell us the reason behind the sharp slowdown in revenue growth in the quarter? Was it a one-off? Was there seasonality? What explains it?
Yes, definitely there is some license slowdown happening in Europe after the Ukraine war. So last 3 quarters, we have seen the decisions are getting postponed for the major investments. So we are seeing something coming back in the first quarter. So obviously January is a better quarter will be there for Q4, but definitely there was slowdown in license revenue in last year, so around $6 million shortfall compared to last year. But we believe that there's a new pattern which is emerging in cloud and a microservices-based architecture, where it's driving the major transformation engine in Europe and Americas, where our investments in the last 5 years on architecture and intelligence, the 2 major areas, architecture and intelligence, is now we are able to compete in the right space, and there the maximum amount of investments are going to come in. So just to explain, yes, there was a shortfall in the license revenue, resulted into the shortfall in EBITDA margin.
Okay, all right. Hi, good morning, Mr. Jain. If you could tell us some more in terms of a license revenue, how much of it is contributed by term and how much of it is contributed by subscription, and how are both of them growing?
Yeah, so we mentioned to CNBC that there's a product business and there's a platform business, and we are investing from product to platform business. Platform business are having a annual recurring license revenue. That's a big area where we build up a long revenue stream. So that platform business is growing 40% year on year, while license business has slowed down compared to the last year. So that's a two fundamental businesses once you look at it. We are building that we reinvested our profit close to 26% EBITDA, 5% we reinvested back. And on last 12-month basis, I think is the right metrics for the product company to work on. So these are the few things which I advise the investor to look at Intellect and any product company from 12-month horizon rather than quarterly horizon. And from that perspective, we are growing 20% on rupee term year on year. So that's not a bad number, 20% growth compared to the industry. We are better off or in line with that.
Okay. Are you seeing any slowdown as far as deals are concerned, Mr. Jain? I ask you because although your deal pipeline is up about 35 to 40%, in the quarter gone by, the number of deals that you won have fallen quite a bit. I know you said not to compare quarter on quarter, but it's still a steep fall. I mean, you've won just 6 deals in this quarter compared to 14 last quarter. So are you seeing any kind of slowdown as far as deal wins are concerned?
Yeah, this quarter, the October to December, definitely there was a slowdown, and I think we should recover back. A lot of deals are in the pipeline, but in these 6 deals are very, very important. We won the deal in US, we have won the deal in France. So we are taking our GTP business in liquidity. We are taking a pole position for winning the deals in entire Europe and America. So in GCP business, we are competing with the 3 businesses. GCP business is consumer banking. We are now competing with Temenos and Thought Machine are the 2 players. In GTP business, liquidity, we are in pole position. And in AI business, where we build up Norwegian pipeline, it's a very, very exciting business on pipeline business. So the AI business, which is going to be the key driver in wealth and insurance area, is driving our future prospect of the company.
In terms of numbers, your average deal size has been stuck between this $5.5 to $6 million range for the last many quarters. In the near future, do you see that pick up?
Not so much on the deal value, but the number of deals will increase substantial, can increase quarter on quarter. So we cannot predict quarter on quarter, but good deals are in pipeline and good strategic deals are in pipeline. So sometimes I say the deal value may be just $1 million, but if it's strategic in nature, if largest bank of AI has chosen us for our AI capability, that is more strategic to us than a $10 million deal, because that gives a signal to the market that we are in the right technology at the right place and our investment is in the right place, because this AI business in the next 3 years is going to be the key business for operational excellence in every technology investments which is there. And people are getting into the build more than buy more.
Right. No, I was actually coming to that, and this may sound a little off tangent, but you know, in this AI space, we're seeing so much, right? We heard from Google last night. You know, they did a live demo of their. It didn't go down very well. The day before, we heard from Microsoft, Satya Nadella. This is all generative AI, and they're expecting it to completely disrupt all aspects of, I mean, Mr. Nadella's words, not my words, all aspects of, you know, how the software business is done. Any thoughts in terms of how this connects, and how fast will this connect in terms of actual impact for a company like yours? You know, if you can give us a sense, briefly.
You touch on the right thing. So now we have a solution which is give you end-to-end underwriting platform. Scanning 45 documents in less than 10 minutes, you can give an underwriter can make a decision. It has a extraction AI, it has got a search engine AI, it has got a business modeling AI. So it's a combination of multiple AIs coming together to drive the faster decision making. One of our clients has increased their business in a documented mail that they were doing $4 million business a year, and now it's $11 million business in a single month. They could able to use the AI in making the decisions around policy making. So this AI is phenomenally. We given a demo on investor call on Sherlock, which we are working on, which gives you a corporate intelligence of any corporate for any investment banking. So that area is now it's in the mainstream. It's not like it's not a passe. Now we have reached the point where it becomes a part of the mainstream.
All right, we will end the discussion on that note. Thank you so much, Mr. Jain, for stopping by and speaking to CNBC-TV18. By the way, for the market, it's still very quiet, but with a downward bias. Cummins is the stock that's really soaring post its numbers. Trent is looking pretty good. Zomato comes out with numbers as well. Ahead of that, Zomato has been up and about, expectations perhaps of profitability. And Uno Minda is a stock that's soaring now after very positive commentary that came in from the management a while back. Mitesh Thakkar of earningwaves.com is with us. Mitesh, your thoughts on individual stocks? I think the overall market, as we know, has been range bound. But are you looking at any stock-specific action for the rest of the day?
So I think the market, was slightly disappointing to begin with, but it's picked up pace again, and this lower side support has come into play. That's a good thing, but I would still want to see some momentum getting past yesterday's high of 17,880. I think that should add to the strength, and waiting for that to happen. Till then, we have individual stock calls. The first of them is a buy on ITC. Keep a stop just below today's low of 372. So look for targets of around 395, 396 on the upside. And the other one which I like is L&T Finance. That's a buy with a stop below levels of 91 and a target of around 96, half 97 on the upside can be looked at.
Okay, all right, Mitesh, thanks a lot for that. By the way, from the broader markets, a couple of stocks are moving very, very well. You pull up Dalmia Bharat, the numbers look quite good. There is visibility in terms of growth as well out there. And the balance sheet as well is looking in far better condition than it was looking a couple of years ago. So that stock's moved to the high point of the day. Syngene post that large trade, but it has been seeing some traction. So that stock's moved higher. And Lotus Labs, one of those big disappointments in terms of numbers. Well, from the lows, it's seen a bit of a bounce, but clearly a couple of stocks from the F&O basket itself have moved to the low point of the day. Big selling being seen out there. Pyramid Enterprises, India Bulls Housing Finance as well, both of them moving lower.
Nigel, the Adani stocks have come off the lows by quite a bit. Look at Adani Ports. The intraday will tell you the story. It's about 40 rupees off the low. That's a big pullback, right? Adani Ports, and that's where we've seen the the bulk of the price activity. Of course, Enterprises as well has also come off quite a bit. Let me tell you, the low today on Adani Enterprises was 1731. So that's a clean 300 rupees off the low point on Adani Enterprises. And I think similar is the picture with many others. This is not to say that, what MSCI does later will have little, it could have big impact, because, I mean, it's one of the largest, it runs one of the largest global indices to which a lot of passive funds benchmark themselves, and any change one way or the other, funds follow. I mean, it's just sort of mirroring what that index looks like, run by MSCI, and funds will respond accordingly. So it's a big event later today, of course, but for now, stocks have come off the lows quite a bit. Nifty also is now almost in the green. 17,864 is where we are at. We'll take a break here. Commodities in focus. Manisha is here to tell us more.
All right, well, you're watching Bazaar Morning Call, and the markets are not doing too much, absolutely quiet. But let's get a handle on what's happening in the world of commodities. As we were telling you earlier, Brent crude prices are now well above $85 a barrel. It's been 3-4 days of an up move, but Manisha Gupta is joining in. Manisha, what are you tracking this morning?
Well, yes, crude is trading on a positive side, but what is not trading on the positive side has been the aluminum prices within the metal sector. We have seen constant profit taking into this one, so much so that we have come not only off the 8-month highs, that is where we were trading in the last week of Jan, but we also have seen a decline of nearly 5.5% over the last 1 week itself. On a month-on-month basis, we still are 2% on the higher side, but clearly we are on a downside trend when you look at aluminum, and the fundamentals really seem to be supporting this decline that we have seen. To begin with, if you look at the LME inventory, inventories. They are up 27% now for the month of Feb itself, and that is the highest in nearly 2 months. So the inventory build-up, not just in LME, but in Shanghai as well, has been quite on the stronger side. Last year, you saw LME stocks decline by 52%, and is the reason the aluminum prices made an all-time high of $4,100 a ton as well. But from the month of Feb in 2023, we have seen inventories continue to gain up. So as you can see, the start was at 1.4 million tons, but we do stand taller in sense of inventories right now. And not just on LME, the Shanghai inventories have been rising as well. China, actually, when you look at the production there, the numbers have been quite on the stronger side. It has been record production. We've seen more than 4% of a jump up in sense of Chinese production in 2022 itself, and 23 has started on a positive note as well. When you look at the power shortages, while in Europe it still is a concern, but China really seems to be easing those shortages. Markets are opening up, and we have seen production as well as smelting try to continue to hold on. So while Europe production fell nearly 12.5% in 2022, it was the Chinese production which was 4.5% higher at record of 40.2 million tons there. And is the reason when you look at the overall map in sense of production for 2021 was up 2.7%. And with even Europe's decline in sense of production, we're up by nearly 2% onto that one. Take a look at the prices then, and we have seen a very sharp decline coming on that one in the last couple of weeks. All-time high in March 2022 was at $4,100 a ton. Currently, we are trading below $2,500, so still 58% down from the kind of all-time highs that we saw in the previous year.
All right, Manisha, thanks very much. That's aluminum and commodities in focus. Now, Mangalam is standing by with the latest on trend. Mangalam.
Well, Trent is doing extremely well in today's trading session, marginally off highs, but the results were mixed, so to say. The revenue for the company grew at around 54%. It was the highest ever quarterly revenue, led by Westside, which did about 17% same-store sales growth. However, we saw a contraction in their gross margins as well as their EBITDA margins. Remember, same time last year, we did see a fair amount of rent waivers, etc. So operational expenses have been higher over and above the raw material pressure that the company is facing, as a result of which the consolidated margins of the company have been 14%. The net profit growth has been led by higher other income. So the street perhaps has chosen to side with the revenue growth as against the operational weakness, because now that raw material prices are off highs, maybe street believes that going forward margins will improve as well. The only thing that keeps a lid on the gains are the valuations. While the stock is off its 52-week high, remember it's still trading at around 76 times one-year forward earnings, as a result of which Jefferies has a hold rating on the counter.
Okay, all right. Mangalam, thanks a lot for that. Well, Ekta joins us as well to tell us about Piramal Pharma. Well, Ekta, there was a debate whether or not there is value or it's a trap. For the time being, the management has really missed their estimates. I mean, what they guided for the second half of the year. Disappointing numbers, right?
Absolutely. It is a disappointing set of numbers, and management had indicated that generally second half is when they would probably see better numbers, better recovery. That hasn't come through. The piece of news additionally, besides the numbers, is that they've approved a rights issue of around 1,050 odd crores. Now, coming to the numbers, revenue is up 11.5%. The key disappointment unequivocally is definitely the margins this time. They've come in at 5.1% versus 14.7%. The loss has widened to 90 crores versus around 37 crores on a Q-on-Q basis, but versus a profit of over 160 odd crores same time last year. Q-on-Q as well, margins at 5.1% versus 10%. Now, 9 months as well, as a whole, the margins have come in at 6% versus 12%, and the loss is at over 230 odd crores. Now, in terms of the revenue, it's really not a revenue problem. The street would have forgiven the company if it was a revenue issue. CDMO Q3 revenue is up around 14% year on year. Complex hospital generics, which is basically anesthesia, drugs, etc., is up 6% year on year. India consumer health, which is basically a whole host of brands which they sell, many of them over the counter, is up around 37% year on year. So that's done very well. They also have a strong track record when it comes to the US FDA. 12 years, no OAIs or official action indicated status, but the street doesn't really want to look at that at this point in time. Stock is down over 50% from the listing price of around 201 rupees. And remember, until now, post the listing, there have been a couple of brokerages which have been quite positive on it. For example, Axis Cap initiated a coverage with a buy at a target price of 160, and Jefferies initiated with a buy and a target price of 150. Stock is way below those target prices. Call at 5 p.m. today. So the street will watch out for what the management has to say.
All right, Ekta, thanks a lot for that. So lots to watch out for in terms of individual stocks. But don't go anywhere. We'll slip into a short break. On the other side, our special segment, It's the Economy. Lata will connect with Citi's Chief Emerging Market Economist, David Lubin, and Chief Asia Economist, Johanna Chua, on the sidelines of Citi's India Investor Conference that's underway. Stay tuned.